Alright, welcome back, guys. So, today we'll be learning how to read the charts in episode 4 of Beginners Forex with Alex FX. Now, first and foremost, what we'll be going through is price action, candlestick anatomy, common candlestick patterns, and market structure with a little bonus inside it. So, first and foremost, what is price action? Price action is a trading method where traders analyze the movements of price on a chart to make trading decisions without relying heavily on indicators. So, it is where you can, for example, show a trader a trader tech and they can just look at it, read price action, and they can say, all right, we can see where, why take the trade, or those stuff. Another thing is just monitor as the whole price move. No, you might be wondering what is price itself. It's just a movement of each individual candlesticks accumulation to each other, and how it moves in a pattern. That's basically what it is. And patterns you guys are going to be seeing very soon. Next thing is the candlestick anatomy. So they have bearish and we have bullish. So for the bearish candlestick, we have a high, our open, close, and our low. Right? Now you'll probably be seeing other traders color their candlesticks, but soon enough, you guys can be just looking at it and say, all right, that candlestick most likely to be the sell. But in this instance, it's commonly red and green. Now, each of them, they have the same thing, which is the wick, the body, and the wick. As I said before, a person say, yo, get wick out, wick in, tapped in, pips, or whatsoever. This is where that analogy comes from. Now, for the bullish, we have our high, we have a close. Realize there's a lot of inverse that actually happens, or opposite, I should say. So you have the open and you have the low. That's pretty much what makes up a candlestick. Very simple, very simple. But now we need to know the common candlestick patterns. Right? So let's zoom in. We have bullish, indecisive, and bearish, just as the previous video before. You realize bullish, consolidation, and bearish. So if you realize there are key principles that pass along throughout trading. These are the technical terms and aspects quite commonly used. So bullish, bearish, buy, sell. They're oftentimes switched out using different contexts, but they represent the same. Alright. So for the bullish, we have the hammer, dragonfly doji, three soldiers, and engulfing. Engulfing is what they probably hear a lot. Bullish engulfing. So if they bullish engulfing, that represents a pattern. Yeah, the indecisive. Surely you'll be hearing doji, but not so much of the high wave. For the bearish, the shooting star, the greystone doji, three crows, and again the bearish engulfing. You're hearing that a lot. So these are the candlestick patterns you'll be commonly seen, but for the bullish engulfing, bearish engulfing, you'll probably hear them very, very, very common. So now on to market structure, and here you can see, or just draw it out for you guys. Let's zoom out a bit. All right, so the market structure, same thing. It is bullish, sideways slash consolidation, and bearish. To identify the trend, it is for bullish market structure. It is higher high and higher low. So guys can see where market going straight up. And also in that interim, those small gaps, it's continuous break of structure. The break of structure here It's not so much important since you know that the trend is going up upward direction. But later on, you'll be seeing how crucial breaker structure is, especially when using certain types of patterns or setting up your trades. Right? So for side-based consolidation, it's just equal high, equal low. Nothing is happening. Market is raging. It's not going anywhere. Do not trade this, guys. I don't trade it personally. I know most traders don't, because it's not going anywhere. And you can be stuck inside the range. Bearish, that's sells. You have your lower highs and your lower lows, but the same thing with the small internal breaker structure going straight down, and then sorry guys, and then from there you guys can easily identify bearish market structure. So realize it is not so difficult to learn the technical aspects of trading, right? And in the next video, we'll be actually going over a technical analysis where we'll be going over the support and resistance, trend lines, supply and demand, breakouts, retests, the whole 9 yards with you guys. And quite possibly like some basic indicators, probably like the moving average, but nothing else. Alright guys, that's it for this video. See you in the next one.